I think the narrative got muddled because that CPI report was a disappointment, but it was driven by what we call stubborn components: shelter, auto insurance. The median core CPI component now has only 1.7% year-over-year inflation. Inflation is normalizing. It's just not evident in the total picture.
So the PCE in a couple of weeks is going to be more favorable, we think, than these latest inflation reads. And I know what everybody says about it being the Fed's favored measure on where inflation is. But are you entertaining the idea that this is not going to be as easy as you once thought it was going to be for this last mile, and therefore the market can't do what you once thought it could?
I'd say that that's really the narrative disruption this week, because now the Fed has 3 inflation reports that it can't argue against that are a little hotter than expected.
And the bulls can't really explain them away either, can they?
That's right. So what we would need to see is April and May CPI improvements, which is in the future, and then keeps the Fed from standing in the way of the economy. What we don't want is a Fed that wants to further slow the economy, which is rate hikes. And I think if they just do even one hike this year, it's still actually a good environment for stocks.
One cut, you mean?
Sorry, one cut.
Yeah, let's be clear. See, that's a Freudian slip, because the greatest fear of all is that they're going to have to hike again, however remote that possibility seems today. And even if you put into the soup all the Fed commentary that we've gotten of late, just seems to be push off rather than push up.
That's right. And I think it's, at the end of the day, it's even as CPI does look like it's somewhat sticky, PCE, as you pointed out, is more cooperative than PPI is, and measures like Trueflation show inflation much softer, inflation expectations much lower. So I think at some point we could also just ask, is CPI a bit aberrant?
What about the valuations of the market? How do you counter the argument that they're just way too stretched? Multiples are just way too rich, given what now is likely to be the case of cuts later on.
I think when someone looks at 20 years of history, that's the argument they'll make. If they look at 90 years of PE multiples versus interest rates, when the 10 is between 4 and 5%, which is a pretty big range, the median PE is 20 times. So we're not even at a median PE multiple of what's existed whenever the 10-year's been in this range. So, and then if you look at a median stock, it's actually at 16 times. I'd say that there's upside to earnings. I think multiples can expand. I don't think 5,200 is the ceiling for stocks this year.
What feels like the right ceiling now?
I know this is going to be tough for investors to embrace it, but I think something like 5,700 is probably where the S&P exits the year. Maybe even higher.
Much more backloaded into that than you once thought?
I think it's still backloaded because we'll have the cuts behind us, and we'll have visibility into 2025 earnings, which probably could be 270, maybe 280 next year.
Well, when you say we'll have the cuts behind us, are you so sure? Right? So let's just take June off the table. For argument's sake, no June.
Yeah.
You think the first one's in July?
Or it could be September. But
that's why I asked you if the move in the market that you just suggested is backloaded. Because you're not going to get a big move until you see the first cut. At this point, now there's a lot of disbelief in the market.
That's right. And Scott, one thing to keep in mind is the probability of a June cut has been reduced, but it can come back if we have a good April and May CPI, because then it's going to put back into focus what is the trend in CPI. It does feel stubborn when you look at January, February, March.
Now, the flip side of the argument that the bulls would suggest is all of this is noise. Keep your eye on the ball. The Fed's going to cut. They may wait. They may not do as many as we thought, but the regime has changed. And the economy is going to remain good, and earnings are going to be strong enough, and they're still going to cut because they're going to be able to, and they'll point to the PCE and say, just don't be blindsided by the other noise. That's the story that matters most.
I'd say that that's a story that's going to, as the dust settles from this week, that's what's going to sort of push back into the front lines of people's minds, because it's totally different than 2022 and 2023. And we're in the middle of earnings season, and I think delivered earnings will be good. And interest rates, look, it's not comfortable here at 4.5%, but the economy's handling it, and there's For now, yes.
So you made a call, I think, first on this program that small caps were going to rally 50%.
Yes.
It was several months ago. I can't imagine that you still believe that's going to happen now that rate cuts have been pushed out seemingly until the fall.
Well, I think the viewers need to keep in mind that small caps almost rallied 20% in a month last year. So for them to rally 50% over the next 8 months, I think is still very plausible, given that median earnings growth for small caps in the Russell 2000s, 19% versus 11% for the S&P, and the median PE is 10 times versus 16 times in the S&P.
Oh, I know why they're cheap, but they're cheap for a reason, some would say.
Sure, but then if we have corporate CEO confidence go up and so mergers start to happen, I think you're going to have a very, very quick adjustment in the price of small cap stocks. And again,
okay, I'm sorry, finish your thought.
Oh, and there's $6 trillion in the sidelines as well.
Okay, lastly and briefly, mega caps. Are you still as bullish as you have been?
Yes, yeah, because I still think it makes sense to own what's working, and that's AI related and the Ozempic related names. But now on the margin, the ISM's turning up, so you want to own some industrials. And because of Fed cuts, I like small caps.
All righty, we'll see. Tom Lee, thank you.
Yeah, thanks.
My stress, Tom Lee here, Post 9 up next. We're trading the turbulence. The Nasdaq dropping in today's session. Star VC investor Rick Heisman.